back to Tax Talk Tuesday. I'm here with you again, Arthur Wills, CEO of WGG Accounting and Tax Services, and today we have a special guest.
Hello and good morning everyone. My name is Mikkel Harbison. I'm here with my colleague to discuss a new topic on Tax Talk Tuesday.
Alright guys, today we're going to talk about Litecoin exchange. And we're also going to talk about reporting your Litecoin exchange. And if you don't know what Litecoin exchange is, today you'll find out. Okay guys, so this is what you need to know. Litecoin exchange is when you exchange real property used for business or held as an investment solely for other business. Now, investment property that's the same type or like kind that has been permitted under the Internal Revenue Code generally is a like kind exchange if not required as a recognized gain or a loss under the Internal Revenue Code section 1031.
Okay, so real properties generally are of like kind, regardless of whether they're improved or unimproved. For example, an apartment building would generally be like kind to another apartment building. However, real property in the United States is not like kind to real property outside of the United States. Okay, now we will discuss reporting a like kind exchange. A Form 8824 to report each exchange of a business or investment property for property of a kind. Now we will discuss the pros and cons of this. First pro, tax deferral of capital gains. Secondly, more money to reinvest. And lastly, no limit on number of exchanges.
And then the cons for a Litecoin exchange are that they strict IRS rules and regulations. They have losses on deferred payments, and then tax obligations remain as well. Okay, so now I want you to look out for some things when it comes to a Litecoin exchange. Now, a Litecoin exchange property cannot exchange under the 1031. It includes stocks, bonds, notes, and partial interest in partnerships. In addition, any properties exchanged must be of like kind. Okay, some things to look out for. Part 1 of the Form 8824 is where you provide details about the old property and a new property. Then in Part 2 of the form, it comes to play when you have a like-kind exchange that involves related parties, such as family members or entities that have controlling interests in the property.
And Part 3 is for reporting details about any gains or losses from the transactions that make up the exchange. This is how the IRS keeps track of your taxable gain or tax deductible loss. And lastly, the form has a Part 4 for use by the certain federal employees. It deals with conflict of interest rules.
Alright guys, in conclusion, the Litecoin exchange carry limits on how long you have to identify and acquire replacement property. So, the first one is the 45 days from the date you sell to identify potential replacement property and notify the seller of the replacement property of your asset.
Now also 180 days after the sale to complete the acquisition of the replacement property. Failing to meet the deadlines may cause the sale of the property to be recognized in the current tax year.
Okay guys, so now I want you to pay attention to some important dates coming up. The first important date is December 31st, 2021, which is the end of the current tax year. And then the next important date I want you to look out for is January 1st, 2022, which is the start of the new tax year. So if you need any assistance with bookkeeping, financial planning, or preparing your taxes for the upcoming year, reach out to WGG Accounting and Tax Services. Alright guys, that wraps everything up for today. I want to thank my guest Mikkel for coming out here today to give you guys the source information on Litecoin exchange and taxes.
And I appreciate you having me here today.
Absolutely. Alright guys, tune in next week for Tax Talk Tuesday. See you then.